So Halah, we focused on Wells Fargo for this issue. Why did you hone in on Wells Fargo?
I think it had a lot to do with, financials have been completely messy for the last couple of years, and a lot of it has to do with the kind of hangover from the housing mess, subprime, and all these stories come out about the banks, and you see Wells Fargo kind of flying under the radar in a lot of these big stories, but meanwhile they've outperformed their big bank peers who are sometimes twice their size. And the other big issue for them is they've had this shareholder for 2 decades now. You might know him, Warren Buffett, and he's been increasing shares year after year. So just wanted to get in there and see how they do so well.
This company was started in 1852.
Mm-hmm.
Everywhere you walk in the headquarters, there are stagecoaches and pictures of stagecoaches and Pony Express.
They've definitely held on to their culture and history, and they use that very much to their advantage, which is interesting because you don't see a lot of banks able to do that right now, especially given the last couple of years. But Wells Fargo is the kind of bank who is putting it in your face from 100 years ago, and they're saying, here's our history, here's how we've been part of American history.
We interviewed the CEO, John Stumpf, and he's kind of a real unique guy, very homespun, Midwestern,
so.
Nothing like Jamie Dimon or Vikram Pandit.
If the 4 big bank CEOs were walking down the street, I think for the majority of people we could recognize Jamie Dimon, we'd recognize Vikram Pandit of Citigroup, and you would recognize Brian Moynihan of Bank of America. If you were in an elevator with John Stumpf, I don't think you would know who he is. And when we asked him about that, he said that's the best thing he's probably heard. That's very intentional. It's not about him. He's not the iconic CEO behind a lot of these other big banks.
Right. So talk a little bit about John Stumpf's quite unique background.
John has probably the most unique background amongst the 4 CEOs. The one thing that stood out to me was he's not an Ivy Leaguer. He grew up on a dairy farm in Minnesota. His father was a dairy farmer, his mother was a nurse, and he was one of 11 children and woke up in the morning and picked the eggs in the morning, went to school.
Right, I even asked him if he was a C student, and he said that would be generous.
Right, he said let's call it a C and move on.
Yeah. So he went to St. Cloud University, which gave him a great education, and then he went to grad school, but his first job was as a repo man. He would go out and at night and look for bank customers who were behind on their car payments, their chainsaw payments, and that was his job. Wells has this unique corporate culture. A lot of companies, they have mission statements and they kind of get chucked in the drawer. But at Wells, their mission statement is like their Bible, and in fact, it's called Vision and Values, and it's 37 pages. It was created in 1994 by Dick Kovacevic, who was the former chairman of Wells, really a visionary leader, and this book really just spells out. It tells the Wells Fargo team members how to behave, how to treat customers, and above all, how to grow revenues.
It's not just a mission statement for them. These vision and value booklets were, carried around by the big executives there. They were worn down. I mean, they were folded. They had markups on them. It's something they take very seriously.
All 265,000 employees have this.
Exactly.
And one of the things in the book that struck me, there's this saying. It says the greatest acquisition story in financial services today is cross-sell. I found cross-sell to be kind of fascinating. So what is cross-sell? Define cross-sell first.
Cross-selling is essentially how many products one institution, one bank can offer an existing customer. If you have a banking client with a checking account, the idea of cross-selling is to offer that person a credit card, a mortgage, a loan in any form. The idea is successful for banks, and the reason they like it, it makes that relationship with a customer stickier. It's deeper. You have a lesser chance of losing them. You learn about them more. As time goes on and you develop that relationship, they become a less risky client for you, and you're able to offer them more products across different channels.
And it's much easier to get a client to get one extra product than it is to actually find a new client. And if you can't sell your existing client another product, then what makes you think you can actually sell a new client another product? Let's talk a little bit about the the biggest issue facing banking today, and that's the home mortgage crisis. Wells Fargo is the #1 home mortgage originator in the country, and they kind of have a unique way of approaching the crisis.
Well, first, let's not fool ourselves. Wells Fargo and bank it acquired Wachovia made huge mistakes, so they're not immune from these problems. They have their fair share of bad marks on the books and kind of their reputation as well. But they'll be the first ones to say, we've made these mistakes. Hopefully they'll die down soon. We'll do what we can. But one of the big initiatives they've kind of come out with since 2009 is these home preservation workshops, where they're essentially held in these gigantic convention centers in very metropolitan cities, and they invite troubled homeowners, people who are behind on their payments, people who are in the middle of foreclosure or about to be foreclosed on, and essentially try to meet with them face to face in these private confidential rooms to help them restructure these loans and help them keep them in their homes. It's less profitable for them to have these banks that are empty or these homes that are empty. So I think their goal there is to keep people in their homes.
Right. They invite, say, 30,000 people to come. Only 1,000 will show up, and they move them through there. And the idea is to solve your mortgage problem right there on the spot.
One woman I talked to who had been behind on her payment, I think, for maybe 6 months. She was a single mom, 4 kids, and said the reason she went to this workshop was because she didn't know that she could actually sit down with someone who had her mortgage and was able to immediately just restructure it. She was going to these other sources who were offering her restructuring cases, and it never worked out. Never did she think that her actual bank that had the mortgage on hand would be able to help her face to face and so quickly.
I think John Stumpf said that in his view, you're not going to solve the housing crisis or even a financial institution's problems with fancy marketing campaigns and PR firms. It's all about kind of face to face, one customer at a time, and it seems like that's the way they approach things there.